Hey everybody, welcome back to 5 Minute Financial Markets. Well, yesterday Jerome Powell gave the market exactly what it wanted for Christmas. He told us that the Fed would be tapering off their rate hikes and starting to slow the pace, which sent the market screaming higher, up 3%. So what would happen today in the aftermath of that big news? Well, not a whole lot. We opened up slightly in the morning, sold off pretty hard, and spent the rest of the day just chopping around in between. Not a lot to talk about today other than reiterating something I've said over and over again before. If you're trading the SPY, you really need to pay attention to those $5 increments. Look here, we opened up around 408 and change, came up to exactly 410 to the penny, and sold off from there down to almost exactly 405. We wound up getting about 25 cents below, but 405 was the support level, and that's where we started to trade back up, and we spent the rest of the day just bouncing back and forth between 405 and 410. The SPY really respects those $5 increments as support and resistance. So if you're trading intraday or even taking swing positions, you need to be aware of that and be prepared for a reversal at those price points. Another thing to note, on the way back up, we stayed firmly on this trend line. So very low volume and just a nice orderly march back higher, almost to exactly flat on the day. We finished down 30 cents, less than 0.1%. Let's take a look at the daily chart, and you can see that we're sitting exactly on this downward trending resistance line that has been a big source of resistance all year long. Going back to the highs in January, the highs in March, the highs in August. Every time we've hit this trend line, we have sold off hard. So, is that what's going to happen again this time? You can see we're sitting right on that line. The market is waiting to decide what to do. And what the market does is almost certainly dependent on what comes out tomorrow, 8:30 a.m. Eastern Time, an hour before the market opens, non-farm payrolls. We'll talk about that in a minute, but what happens with that report will likely send the market screaming higher or falling lower. I would like to take a quick moment just to flash back to my video from November 15th, about 2.5 weeks ago, where I predicted exactly what's happened over the last 2.5 weeks. Prices moving up, getting to that 408 to 410 level on the SPY, hitting this downtrending resistance line, and pausing there in advance of the upcoming jobs report on December 2nd. I really think we have room to run here. I think we could peak out around 408, 410. There's nothing really on the calendar as far as news events, and we've got the Fed meeting, the Fed minutes coming out on Wednesday the 23rd. Happy Thanksgiving. We've got the next jobs report December 2nd, and then we've got back-to-back CPI on December 13th, followed by the FOMC rate hike on the 14th. Right now it's looking like about a 50 basis point hike, but we'll see. But between now and then, I mean, there's nothing to stop this market from running up there until it hits this upper resistance line. 408 to 410, that's where I'm going to start pulling back on some of my long positions, taking profits. But until then, I think it could go. Boy, do I like being right. Okay, enough about equities. Equities were boring today. Let's take a look at something interesting, like silver. Look at this big 5.5% move in silver. So yesterday it broke up into this area of a lot of supply. We talked about this before, but this shaded area here, this is where we've seen a lot of reversals take place over the last few years. Whenever the prices come back down into this area from the upside, it has hit massive demand and reversed course over and over again over the last few years. Then it came down earlier this year and sort of chopped around in this area. A lot of traders opening and closing positions there. So you know when it gets back into this shaded area, there's going to be a lot of volume, a lot of supply and demand battling it out to see which way the market goes. Well, it made a big move yesterday up into this area of supply, and today it just powered right through out the other side. I don't think it's going to stay out there. I think it's going to have to reject back in here, chop around in this shaded area a little while to figure out its next move. I could be wrong. It certainly could blast up from here, but typically that's how markets work. It'll reverse back here, chop around, consolidate before it makes its next move. But if it does confirm outside and above of this rectangle, I think we have a clear path all the way to $25 an ounce. Silver is looking really strong right now. And that is largely because the dollar is looking very weak. After Fed Chair Powell's speech yesterday, the dollar sold off big, continued down lower today, down to 104 and change, the lowest it's been since mid-August. And really, if we look at this, let me get rid of these interest rates. If we look at the dollar by itself, it is showing more weakness than it's shown all year. 2022 has been a really strong year for the US dollar. And ever since the beginning of October, it has finally broken down. It could be rolling over here, and we could see it head all the way back down here to the 100 level, which would be fantastic for markets, commodities, cryptos, equities, anything that's priced in dollars. Let's quickly look at the VIX, the volatility index, also known as the fear index. Again, when the volatility index is high, that means there's a lot of fear in the market, and that means there could be sell-offs. We want to see a nice low VIX if we want to have a sustained rally in this market. This is the first time the VIX has closed below 20 since back here in August. Now, it's just a single day close. We can't take a whole lot of information from that yet. But if it confirms under here again tomorrow, that is a great sign, and I think we have a lot of room to run. But like I said before, this is all going to come down to the non-farm payrolls report coming out at 5:30 Pacific time, 8:30 Eastern, 1 hour before the market opens. This is going to determine the next move in the market. Do we break through this upper resistance and head higher, or do we fall back down like we've done so many times this year when we hit that resistance line? We'll find out early tomorrow morning. That's all I've got for you today. If you enjoyed this content, please hit like and subscribe, and we'll see you next time.